Yeah.
Quite a crowd this year.
Yeah, there's a couple that we didn't have any seats left. Some of the presentation, it was pretty full. There's people standing in the back.
Wow. I know where one of the ones are like 31 of them. It's crazy.
Oh, wow.
Fun's supposed to start.
Interesting seeing all these, because I've never been introduced to,
These companies.
yeah, or this setting, you know, people trying to get investors and.
Right. Yeah. Just trying to get investors.
Mhm. Yeah, they always struggle anyway, too. Good afternoon. Our next presentation, MicroCap, is Jim Rakovich with McCoy Global.
Thank you and good afternoon, everybody. Thanks for taking the time to listen to the McCoy story. My name is Jim Rakovich. I'm the president and CEO of McCoy Global. We're a Canadian-based and listed company that's in the business of providing products and technologies to the oil and gas industry globally. And we'll get into the details about that. Our focus on shareholder returns, our current share price, I'll get into an announcement we put out this morning, just fortuitous timing. And we'll talk about that. The market cap is, I think I last looked, about 88.5 million now as of this morning. And we have a clean balance sheet, no debt, and generate positive cash. And I think we have a pretty good growth story going forward. So what's our opportunities at McCoy Global? We are a global provider of TRS equipment. What is TRS? It's tubular running services. So our customers, we're not a service company in oil and gas. We provide service companies with equipment, technologies, data acquisition technologies as well, so that they can go and do their job successfully, safely, and efficiently. And so that's what we do. And we have the broadest product line in our business. We'll talk about that as well. Again, we're a profitable business with a clean balance sheet, and we have plenty of capital to deploy to our growth strategy, as well as return capital to shareholders. And we think we have some very significant potential for upside. I think the announcement this morning that we put out before market speaks directly to this last point quite significantly as we bring our technologies forward. So tubular running services today, there's the overall market for land and offshore is about a $2 billion market. The labor costs associated with running casing and wells on land and offshore applications globally is about $1 billion. It's half the price of doing the successful service job around the world. And our objective has been to solve what we've been hearing from our customers for several years now, is the inability to successfully recruit, train, and retain casing crews to go out to the rig sites and run casing. And a lot of accidents, a lot of inexperience, and a lot of turnover. So our objective was to automate the process significantly and reduce that headcount significantly around the world. And the cost savings for our customers would be significant, and not only that, solve their biggest issue, which is people. We're a global leader in our market. We sell to top-tier customers around the world. Our corporate head office is in Edmonton, Alberta. We produce all of our technologies currently in the US. All of our hardware is produced in Lafayette, Louisiana, and all of our software and data acquisition technologies are produced in Cedar Park, Texas, which is a suburb of Austin. And in the Eastern Hemisphere, our central hub for the entire Eastern Hemisphere is located in Jebel Ali, which is the tax-free zone in Dubai. And from there, we have a distribution warehouse, we have rental fleet, and we have customers' technical support and engineering. And that hub looks after the entire Eastern Hemisphere. So that's where we operate. By the way, we do ship to approximately 50 countries a year. So we have the broadest product and service offering in our business. We have competitors in every one of our, almost every one of our individual products, but none have the broad product line that we have, which is really critical to our smart product integrated package, as we describe it. So you see where we've boxed in these McCoy Smart products. This is our fastest growing area of revenue and margin in our business, and we've managed to design and develop these technologies and integrate them. And again, the announcement this morning is a example of the success we're now having in getting commercialized with this integrated package to a U.S. customer. So this slide here, we talk about our product and service offerings. It's even astonishing to me to think that 3 years ago, that first category never even existed. And now it's our top revenue generating segment of our business. And if you look at the margin profile, it is also a strong margin contributor to our business. Our legacy business, they've been running casing and wells in both land and offshore the same way for decades, for 50 years, with using hydraulic power tongs and other manual handling equipment. And it's been around a long time. We have competitors, and it's a commoditized product, so the margins are lower. You're selling on price and deliverable delivery times. And we've been shifting our revenue mix away from those lower margin commercial products to our high margin smart products. And we've been getting quite successful, and we expect that trend to continue going forward. Also, the other thing that's important is it's not only our most recent introduction to our software as a service. In the announcement this morning, we also announced that every one of those packages that we're going to be delivering have a subscription component to them. So you can buy the hardware, but if you want them to be fully connected and get the true value of the automation and all of the reporting, post-job analysis, and all of the critical data, you have to have a subscription. And so that going forward beyond 2025 and 2026, we're going to start to see a more important role that SaaS will play in our revenue stream as adoption of these technologies begins to get traction. However, even with that said, our aftermarket is a very strong, repeatable business, and it's very consistent. If you look at any of our quarters, we typically generate 35 to 38% of our revenue will be aftermarket, replacement parts, consumables, and service. And in our industry, our customers are very loyal to the OEMs. They don't typically chase aftermarket replacement parts. They stick to the OEMs, and we generate a very strong revenue stream. And as you can tell, aftermarket is got strong margin profiles as well. Financial performance since COVID, we've been gaining a really good traction, consistent year-over-year improvement in our revenues. And excuse me, what I'd like to mention here, what's again really important, if you look at the U.S. land market, rig counts have consistently been dropping, and there's not 600 rigs anymore running in the U.S. land. And yet our fastest growing revenues over the last 2 years have been in the U.S. land market. And it seems counterintuitive that rig counts are going down and our ability to sell technologies into that market are going up, and it's all because of technology. They're not buying the commodity type products anymore. There's plenty of those around. There's lots. So they don't need those pieces of equipment with that low rig count. But it's the adoption of the technology and the problems we're solving with that technology that's been getting traction in the U.S. land market, because it's solving some of the biggest problems our customers have. And the other thing that's important to note is that our customers, which is the E&P companies, the Exxons, the ConocoPhillips, Oxys, all of the E&P companies, they are demanding that safety get higher priority and efficiency, and they want all of the physical head crews to be totally away from the what we call the red zone, which is right on the rig floor near the mouse hole. So getting the people off the rig is really critical to the E&Ps, and they're driving this, and they're willing to pay those customers of ours that are making those investments to be able to do those jobs successfully with much less people and a lot safer. We do have quarter to quarter, there's lumpiness to our revenue. I always advise to look at McCoy on an annualized basis. When you're developing technologies and getting the sales, we sell internationally all over the world. In many cases, letters of credit are used for international sales, and there's lots of shipping arrangements that need to be made. Either they're going in containers out of the port of Houston, or things are being flown. So our ability to predict right at the quarter that every shipment's going to ship by the end of the quarter, that's not always the case. So I always prefer to look at McCoy on an annualized basis rather than quarter to quarter. So tubular running services, we're ideally positioned to address the industry challenge. I've talked a lot about that. Industry step change for land and shelf. This gives you a better picture of what conventional tubular running services was like for 50 years. Manual equipment, lots of people, and lots of opportunities for injuries and mistakes and human error. We're going to have to update this slide pretty soon, because we're showing that we're in the commercialization process. So the Smart TR is a reality on the right-hand side, and we're there today. And now we're going to start delivering those packages to our customers. These packages and these technologies not only have opportunities in the U.S. land market, but globally as well. We are doing field trials in the MENA region. We're very strong in the Middle East. We have the largest installed base of tubular running service equipment in the Middle East. We've been doing business there for 30 years. And so our opportunities to utilize these new technologies in those markets is going to be significant. So the barriers to entry, people will always try to copy. The trend is going towards automation in a very quick way. We started to develop this technology 6 years ago, and it takes a while. And we believe the barriers being us having the broadest range of technologies. For someone else who are involved in this business to be able to now try to get all the pieces that are required together or develop or acquire, it takes a long time. We've been doing it a while. So we think that we're the first to market, and we're looking forward to strong market penetration over the coming years. In the The hydraulic CRT, where we show Smart TR, received first orders, hydraulic Smart CRT. I want to mention that in the Middle East, they're switching their contracts. So all of the contracts are managed by the national oil companies. So Aramco and ADNOC out of the UAE, they're all now making hydraulic CRTs being the requirement in the new contracts. Some are going to be issued this year, some late this year. And we expect with our introduction, again, very timely, of our hydraulic CRT is going to give us a real strong leading position to be able to get those kind of contracts. So our smart product revenue, again, in the last 3 years, the growth of our smart product revenue has grown substantially, becoming a really important part of our revenue stream, and we expect this trend to continue. Experienced leadership team. We've got a very strong technology group. One of the things, if you ask our customers, what are the things, what's the one thing that separates McCoy apart from the competitors is our application experience, not only on the engineering side, but on the field technical support side. We have people stationed around the world that can answer questions to customers, very technical. They know what our customers do. They know it intimately, and they can provide strong application experience and advice to our customers on a daily basis. And I went pretty quick. That's my last slide. Hopefully, there's enough time for questions. Yes. Oh, so this morning we did a press release. Sorry, yeah, I should have. I'm sure not everybody read it. That Smart TR package, we just received a purchase order yesterday, and so we announced it before market this morning for an $11 million order on Smart TR packages for the U.S. land market for a single customer. Yes. For how long? That 11 million is a full sale, and we'll have all that 11 million delivered, that equipment delivered by the end of the year, and then the ongoing revenue will be the SaaS component to each package. Yes. No. Correct. But SaaS is an early component for us, so in the future, as the SaaS component of our business starts to mature and get larger, then we'll start disclosing that. Yeah. Yeah. So fortunately, we produce all of our technologies in the US. We do have Canadian components that we acquire and ship into the US for assembly, final assembly. Currently, as we speak, even those components are, as of the most recent announcement, are protected under the Mexico-US agreement that was in place with the previous Trump administration. But we have some fairly good levers we can pull. So we don't expect any material impact to McCoy or our customers with tariffs. Yes. No, those are the SaaS is going to be generated based on how the contract is put together on how they're going to pay the subscription on a regular basis. So right now, our SaaS pricing, because this is we call it introductory pricing. This is a very large customer, one of the major players in the U.S. land market. So we want adoption. This is typically how we go to market with new technologies. So the SaaS component has got good value, but as that adoption becomes more broad, then we'll be able to reprice. We did that with our FMS. If anybody follows McCoy, our flush mount spider technology, which is part of the package, as we introduced that a couple of years ago, we sold a lot of them, and they're all smart ready. We had introductory pricing just on the technology, And as we started to better understand in the early days, in the early orders, the value our customers were achieving with those technologies, then we were able to consistently raise our prices till we got to where we thought we were getting what we need to get out of that. In the old days, when it was we were selling commoditized tools like the hydraulic power tongs and those kind of things, as a producer of equipment, you're selling on margin. And now we don't think that way anymore. We're selling on value. Yes. Are you talking about this slide? Um, right. Yes. 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 They were a customer of our legacy equipment and a customer of our FMS equipment, yes, but not the other stuff. Yeah.
Given the step, we think
Yeah, I think I mentioned that our customers are making demands. As a matter of fact, we've been working with our major customers, and for the first time, going hand in hand with our customer, meeting the big E&Ps and presenting this technology to them. So I think the answer is yes. It's going to continue to be the others that play in this TRS space are going to have to adapt. The E&Ps are going to demand it. So that is about as good as it gets, is when our customer starts to say, in fact, when the way it happened with our FMS, it was such a successful tool in removing people from the red zone and working incredibly well in the field that three E&Ps in West Texas insisted that anybody who wants to run casing for them in any well have to have the McCoy tool or they can't do the job. So that's about as good as it gets when your customer's customer demands that sort of thing. Yes. I guess the real answer is we don't know yet, because it does take a couple of years. They got to put the equipment in the field, get them working. And then as time goes on, then you start to replace components and pieces and parts. But I think you're headed in the right direction, that once these technologies get into the field, they are going to require aftermarket. And the aftermarket margins are probably going to be at least minimally consistent with what we show you on what our current aftermarket margins are. Yeah, it's a big deal for us when aftermarket's that large of a component of your revenue. The more installed base you have in the field, the more that is a very strong, consistent revenue stream with great margins. Yes. Yeah, we have, the competitors, they're not just going to sit back and watch their business go away, that in any industry. So, some of the competitors and individual products are going to try to replicate around as best they can. We do have IP on almost everything. But you know, there's always ways to work around IP if you work hard enough at it. And but I'll repeat that you can, in these individual competitors, they can recreate potentially similar products to what we're introducing in the individual products. But to be able to create an integrated package, they're going to have a lot of work to do to capture all of the equipment that's required. That depends. Most of our competitors in this specific space are private companies, but so we can only estimate. But I would say that for most of the individual products, we're either the largest or the second largest currently. Yes. Yeah, like I said before, with the rig count decrease that's been going on in the U.S. land, it's been our strongest growth market is the U.S. land, all because of safety and efficiency. We expect, if WTI gets to $40 or less, it doesn't matter what you're selling. Rig counts are going to go down tremendously. So there is a limit at a certain price of oil. But natural gas is, coming back quite nicely. So in areas where we have strong customer base, like in Pennsylvania and those regions, and in the Middle East, a lot of people don't realize that in Saudi and as well as the UAE, there's a strong push for unconventional gas in those regions. And for that, they need this type of equipment. Conventional equipment doesn't do it. Long laterals. We did it well with this Smart TR as a test run in our field trial. That was 5,000 feet vertical down to start. They have to run the pipe, and then it went 7,000 feet horizontal, and then it went up again to get around a geological hump, and then across, and then sideways down again. And we had to run the casing with this package through that whole profile. It's like 400 or 500 joints of pipe. Pretty cool. Am I done? Oh. Anyway, thanks. I missed the signal.
Yeah,
Sorry.
that's okay. Thank you so much.
Thank you.